Once again, guys, this is literally a pandemic podcast. So it explains all of what's happening right now.
We're here to talk about bread, lettuce, cheese, dead presidents, green.
It's just money, man. It's just money.
Welcome to It's Just Money Live. My name's Jared. As many of you might know, I have a master's in personal finance, and I more or less work in small business. Jack, give us a little brief introduction to yourself.
I'm Jack Kynion. I'm a financial advisor and attorney practicing out of Overland Park, Kansas, and I am the recent father of a now 4-month-old. So there's a fun fact for you. It's going to get a little weird tonight, guys. As you can already see, there's a lot going on in the world.
So we got Matt. He's a co-host of the regular episode along with Raul, who is also going to be filtering your questions and helping us know what's going on. So, Matt, I believe you have a few questions. Matt has a PhD in psychology and may even chime in at times from a very different perspective than Jack and I.
Here's some questions we got ahead of time. The first one, I think, which a lot of people are thinking of, is in light of the stock market craziness that's been going on, what should people think about their retirement counts in light of this situation?
Has the stock market been moving?
It's a little. There's been unprecedented market volatility, and that every time there's a crisis, the phrase unprecedented market volatility comes along. I think it happened at the end of 2018 when we had a 20% stock correction in about 3 months. It obviously happened in 2008. It was talked about during the European debt crisis in 11 and 12. But this is actually unprecedented. The peak to trough move in
define that, please.
Particularly U.S. equities. Peak to trough means the highest point that the stock market got to where it is now, or the lowest point. It's trading just above. It was up today, so it's just above the lowest point it got to. Has happened extremely fast.
How fast?
Most of the losses have been in the last 10 days.
And how fast would be?
February 24th, I think, was the actual peak. So that's less than a month. And
what's the fastest it's ever happened before in all of history?
Before that? I don't know, probably about 3 months peak trough, 30% loss.
Which time was that? Sorry, I'm just going at you.
87 would compete.
And that's the one where they had like a 20% loss in one day. 87?
Mm-hmm.
So 20% in one day, and then yeah, and it was still way longer.
There are a couple of periods during the 08, 09 crash where you have short periods of time where there's a 20% loss, but 30%, it takes a while. And then all the way to the bottom takes 6 months.
Just crazy. I remember calling Jack actually when we first started learning about this, and I was like, I'm thinking maybe this is going to be pretty serious. Maybe I want to change some positions. What do you think if I start pulling some out? And historically speaking, we know that trying to time things perfectly is a bad thing, and being patient and panic actions are bad. So it was a little mind-boggling when deciding to take a week to think about it was too late. That's all I remember. I just remember blinking and being like, I guess I'll just stay. Yeah. I will ride it out.
That depends a little bit on what your perspective is. So there's a difference between volatility and permanent capital impairment. If you're under the age of 50, probably older than that, but we'll just be conservative here. If you're under the age of 50, then the volatility that's happening right now probably doesn't have a significant impact on your long-term retirement plans.
It's encouraging to people.
You may want to consider changing your allocation, buying some stuff, selling some stuff. The most important thing is to keep your cool and assess where you are today. So don't think about it as where I was 2 weeks ago. Don't think about it as where might I be in 2 weeks. Think about where you are today. Think about what might be the possibilities would happen and how you feel about that, and then make decisions. You really need to take a moment, as that term is understood, and try to assess that as best you can. I think the biggest thing people need to avoid, and I'm just going to overemphasize this, the biggest thing people need to avoid is panic. I mean, panic is what's ruling the market for the last 8 days. We had last Friday, the stock market last Thursday falls the largest amount in a single day it had since 1987. Friday, it goes up the largest it had since '08. Monday, it fell farther than it did on Thursday on a percentage basis. So it set 2 records in 3 days. That's a crazy amount of volatility. There's a lot of reasons for it. The worst thing to do in that situation is to panic. And there's a difference between selling because you don't want to deal with this for a while, because you have a plan, because you've decided something, and panic selling because if you panic sell, the next week you're going to see a couple of days up and you're like, oh, I got to get back in. I was wrong. I missed it. And you're going to panic buy and the market will whipsaw you. So whatever you do, make sure you're doing it in a measured way and well considered, which can be very, very difficult when emotions are running high and there's a lot of stuff going on. But figure out a way to give yourself 15 or 20 minutes or 30 minutes to actually think until you get to some sort of peace about it, and then figure out what you're going to do.
I want to hear one of the more fortunate stories I've heard recently. So I was talking to somebody and I said, pass on your wisdom to me. It's an older than me gentleman, already retired. And, I was just talking with him and I'm like, kind of slowly leaning into what I'm really interested into, which is like, how do you feel right now about your portfolio? Come to find out, because he just seemed pretty relaxed. And then he was a little open about it. He goes, and I kind of asked more bluntly, and he goes, well, actually, a little bit on the fortunate side. I had decided I didn't need more and I didn't really want risk. So I got out about 3 weeks ago just because I decided to wait till after the election. Like, well,
It's a good call.
that worked for you.
Yeah. Hard to predict a global pandemic. Seems like he didn't, but got a little bit lucky. That's good.
I
Luck
told
is
him
good.
if he just told everybody he predicted the pandemic, he could start a hedge fund. Look, I have proof.
Yeah, you could probably start a hedge fund anyways.
What else we got, Matt?
Not that that's disparaging towards hedge funds, but it is.
Next one is on the flip side, which you guys sort of talked about, but maybe go in a little more in depth of how should they be thinking about the market right now if they want to invest?
Well, I can speak as a person who is doing this. I have no idea. I literally look at it every day. It is changing so fast. What I have decided for myself, and Jack can comment on this, I'm sure, is I don't need to be perfect. Trying to be perfect leads to mistakes. So like trying to time like when's the bottom, that's a mistake. It'll distract me. So I've just kind of been watching and trying to figure out when I think it's getting towards the bottom. And then in the meantime, I've been watching all the new articles that are coming out, the different industries that are getting hit, what the government wants to do, and then trying to kind of figure out where I want to be comfortable and then so more or less allocate the resources, but then try to kind of decide when to start getting in. But it's not like I'm going to get in all in one day. And it's going to be over time and probably in, 3 to 5% chunks or something. I don't know. But the truth is, I can't tell, nor will you probably feel comfortable answering either. Is the market going down another 20 to 30%? Or is it going to hang out here for a while as people kind of calm down? And is it going to start climbing back up? But it's not going to climb up super fast. I doubt it climbs as fast as it fell. So I think I have time, even if I miss out on the bottom right now. And it is the bottom.
Even if it does climb as fast as it fell, an important point to realize is, let's say the market's down for even numbers 30% right now. If it goes back up 30%, you're still underwater, because losing money is more valuable than making money. A 10% loss requires an 11% gain to get back to even.
So when you say more valuable, you mean it's more costly almost.
Yeah. 20% loss requires a 25% gain. 30% loss requires like a 38 or 39% gain, so on and so forth. 40% loss requires a 67% gain to get back to even.
And what have we had?
Right now we're about 30.
So we need a 30.
If you were just invested in U.S. stocks, and particularly the Dow, because the Dow's lost a little bit more than the S&P. Well, the small cap stocks have lost 40. So
how do you
they
feel
rallied
overall on? Are we? We have room to fall.
Yeah, I think that the question is, what should you be thinking about now if you're going to be thinking about investing, because so many things have changed in such a rapid amount of time. You need to understand that the range of outcomes is still pretty wide. So peak to trough, stock markets have lost 80% of their value. Just this year, there are oil investments because of what the Saudi Arabians and the Russians have gotten into a fight about and flooded the oil market with barrels of oil, which has dropped the price. And so then companies that produce and or move oil have lost a lot of value. And a lot of those, that entire industry has lost 60, 70, even 80% of their market value. That can happen. So even though we've fallen 30%, it could be a lot more. On the flip side, we've fallen 30%. So things are definitely not priced as highly as they were before. Whether they're expensive or not is a valuation question I'm not going to get into because it's complicated. But if you're thinking about getting in now, understand the range of outcomes is still wide. It can be down 30, up 30 over the next year. That can happen. So be prepared for that. Don't invest unless you're willing to lose money in stocks. Invest in something else if you're not willing to lose money. And then second, as Jared was trying to say, there's a concept called dollar cost averaging. Google it if you don't know what it means. It essentially just means that I don't know when I'm going to get to the bottom on this investment. So I'm going to put 10% in today. 2 weeks from now, I'm going to put in 10% more. 2 weeks after that, I'm going to put in 10% more. And I will be buying that asset at different prices. And I will eventually get to the bottom, which will increase my future return, because if it's going down, I'm buying it cheaper so that the future return is higher. And if it's going up, then I'm just dollar cost averaging up and things are going up and you're fine. It doesn't matter. You're happy. So those are the two things. Understand the range of outcomes is still wide because it always is. And
just to be clear, you don't lose until you sell. So if it did go down 30 and you bought in today, and you dollar cost averaged again, right? And then you dollar cost average on the way up, right? So
yeah, that's assuming that the underlying investments that you make eventually, recover, but it's a fair bet to make. The most important thing, it's in all of the disclosures across finance, is that past performance is not indicative of future results. Risk matters. Risk exists. You can't get rid of it. So just be aware of the risks. Be prepared for that. And if you can psychologically go into your head, Matt can probably speak to this better than me, and say, I got $10,000. If in 30 days that's worth $7,000, what am I going to feel about that? What am I going to think about that? Is that okay with me? And just try to play that out in your head. It'll help you maintain the discipline that you need to maintain to be an investor.
Next question, which is, what should small business owners be thinking in light of the coronavirus quarantine-ish sort of situation we are living in?
So different markets, right? I mean, we're in Kansas, so I have been called many times, and I've told people similar things, which is, in Kansas, we have more warning than anywhere else. We're ahead of the coast or behind, however you want to define that. And so I've been telling people, do not just close your doors for 2 weeks. Like, they came out on the media and they're, and President Trump's like, everybody shut down for 2 weeks. And I'm like, it's really important that you alter your business model and you make it safer. And we do need to prepare, and we do need to try to do our part to help flatten the curve. So I've been encouraging people to come up with completely new protocols. Know you're going to go down in efficient. Like, you're not going to see the same volume of whatever it is in any industry. So you have staff that you can put to work, and you can change all the protocols, make it less efficient, focus on cleaning. So if it's a medical practice, it's clean up after every patient. Don't even let them check in or check out. Just they're in, they see the doctor, they're gone. If it's a coffee shop, do door delivery right to their car, have them text in their order, get a website up and running overnight, figure it out. You got millennial workers, put them to work. You need to be capturing every dollar you can right now. And if we get to the point where you get shut down, you're going to be really happy you operated. And reach out to your consumers and ask them to to order from their car. I mean, there's really no reason why you can't do that.
I'd say this as an older millennial, so somewhat begrudgingly, but in doing that, use social media as much as you can to communicate with your audience, especially now, so that they know where you're at, what you're doing, what you can do. There's a lot of uncertainty out there. If you can get in front of their eyeballs to let them know that you're still open, what you're doing, what you're providing, how you're doing it, make sure you're doing that. I think everybody's doing that, but in case you aren't, definitely do that so that people know. It's an amazing tool we have. It's a good time for us to be able to communicate this way.
Yeah, more than ever. So, I mean, that's kind of the small business advice right now is to, now if you're in New York or something and they're like mandatory shutdown and stuff, I mean, it's just it's a different ball game. Bigger cities are having a very different current experience, and I'm not even sure I'd be qualified to help them.
And I'll just say this as encouragement to keep the faith. Don't despair. It's weird. Nobody's experienced it before. Things will rebound at some point. Some things will get back to normal, even if some of those things are a new normal. So keep the faith and don't despair, and keep working on solutions.
Yeah, and the reality too is landlords and everybody or banks are going to have to be dealing with everybody.
Well, yeah, so that's actually a really good point. Make sure you're communicating. The people that you owe money to, the people that you employ, the people that owe you money, make sure you're communicating right now, where the whole system is just a little bit different. Communication goes a very long way in being able to keep things moving, even if they're moving slower or different or weird. Don't be afraid of communicating with people.
Yeah, I think that's key. I had one company I consulted for. I said, email every landlord immediately and let them know that you will get back to them, but rent checks will not be there April 1st. Just not going to happen. They all had great responses. I mean, not one person had a negative thing back from a landlord. Lots of understanding, but again, they probably really appreciate the person who's talking with them and telling them. And I told them to share all the things that they were doing to stay afloat and sacrifice that they were making as a company, so that they would understand they're not asking for entitlement or handouts.
Right.
This is everybody doing their part.
And small business owners know this as well as anybody. So much of business is just planning your future, which is the same thing in investing. You're trying to plan for what you're going to do today and tomorrow and build this thing. And it's so hard to do if you're working with variables that you don't know anything about. So it's way worse to like, you don't get rent and you don't have communication if you're the landlord. Because at least you have communication. You can start to plan for it. You can understand that it's coming. You can do something about it, even if it's just to say, all right, well, we can get to that in 2 weeks. But if you don't have any communication at all, it's like, well, are they still in business? What do I need to do? Do I need to call my attorney? How is this? Is anything the same?
The government
but
says
with communication,
them.
maybe we can exercise collective patience as a society to be able to get through this.
Last part about reaching out to the landlords was good. Next question is, because this has been on the news, the whole millennials thing has been called out, and us all being millennials. I'm just curious of what you guys' thoughts on the millennial and Gen Z response to the coronavirus.
Personally, I feel irritated. So I don't understand why somebody doesn't just come right out and say it. They're starting to a little bit in the corona press conferences and just say, millennials, suck it up. Work 16 hours. They keep comparing it to wartime. They keep saying this is your World War II, which I'm like, what the heck does that mean? But that's fine. If the reference to that is you need to go live in your factories and work 24/7, and you have to put in extra time to get the same amount of money or less, so we survive this, and you're sacrificing so other people can live, that's fine. Just say it. But saying that does not feel like the message. So I've gone from a week ago, I'm trying to convince people this is serious, to then today and tomorrow, I'm sure I'll have more of these, people who are the same people being very serious about it. And that takes time. You can't expect. So now there's more people who will start to realize it's serious and more people who will start to realize it's serious. And so I feel sometimes as if possibly administration or press or whatever is like, these other people aren't listening. So we have to be more extreme with our statements. And then we're trying to reach these people, and the people in the middle are just kind of doing everything they're asked of. And it's too much even at times. Like, for instance, in Kansas, there's a lot of businesses that just literally said, we're closed for 2 weeks. They want us to be closed for 2 weeks. We care a lot. We're trying to help people. And so they just close. But it's not going to be just 2 weeks. And in Kansas specifically, we're way behind the coast. We're almost like they already shut down schools, probably prematurely. They've closed down so many things that how much can millennials in this area bear? How long can they go without paychecks? Who's going to pay for these bills?
Well, and if we do go without paychecks, then parents, look out for your basements, and I don't want to hear any complaining.
I was like, what's flooding? Oh,
You
yeah.
know, millennials
All
live in
the
parents'
millennials, yeah.
basements and stuff like that
Here
because
they
there was a
come.
great recession and the worst housing market ever in the U.S. and nobody can afford a house and student loans and all that.
I have wondered, why haven't we considered possibly doing this the other direction, which is like sequester people who are older and have a high. I would rather work for 16 to 20 hours a day. Know that I'm sacrificing for others. That's fine. And know that I'm not going to get paid. Right. But then get paid something and have like something I'm working towards, then be told to go home. So if we had said, hey, people, if you're immune compromised, go home. Millennials take care of them. I almost think we would have had a better response. I think the millennials would have stepped up more.
Well, I think that there's a bit of false dichotomy to say that there's the one millennial response, though.
I do agree there's two types of millennials.
Well, there might even be more than that. Who knows?
Just two. Two. My mind can't wrap around
and
more than that.
I think the argument you're making is going to be a lot more relevant.
In 3 weeks?
Yeah, 3 weeks, 4 weeks, 6 weeks from now.
Why did you tell me to stay home?
I can't stay home any longer. Or if I have to stay home, I'm going to have to figure out something to do for income, for this, for that. The government literally can't pay for everything. We'll see if we have a couple of weeks and it does something both socially and as far as stemming the tide of the virus. And then after that, we'll have to see.
What's your opinion? You didn't really weigh in very much. Do you not believe that millennials would have gone and dropped off groceries at the door of their parents?
No, but I think they are doing that.
And strangers.
I think interpersonally they are doing that. I know stories of people doing that.
So
I think
if those people that would stay home, why can't millennials go to work?
I think a lot of those people are staying home. And I think just this week, a lot of those people are starting to really recognize the danger to them. That's the other thing that we have to have the perspective of. This thing is moving so fast.
It's very, very,
the social
very fast.
effect of it, the government response, the market response, the actual, the physical virus is moving so fast.
Incredibly
that
fast.
we don't have the ability to be able to keep up with all of the changes. And then we really don't have the ability to realize how long ago 7 days was, which is not a long amount of time, but we've crossed oceans of time in 7 days. And so there are a lot of people that 7 days ago who maybe were immune compromised or were 65 or 70 or 75 that because it wasn't present enough, because we didn't understand enough, weren't doing things. But a lot of those people now are starting to sequester. Right. So that's why this next 10-day period is actually kind of important. And then after that, we'll have to see. And just like everything else, just like every political issue, just like every economic issue, there's not going to be any easy answers. Right. There's going to be a balancing that we have to try because people have competing needs and competing interests. And the most important thing, in my view, that we can do is to try to keep the emotions somewhat low and realize that we all basically want good things for the country and for all members of the country. So what can we do? What can we balance? What can we negotiate to make it work for everybody? But we're still getting ahead of ourselves. There's that argument is a couple of weeks away. And when we get here, maybe we'll do another Facebook Live and we'll figure out whether or not the elderly have to die so that we can go to work. Was that too much? Sorry.
10 days from now,
this is a money podcast. Sorry.
10 days from now,
let's go back to
what happens? Can millennials just not go back to work for another 2 weeks? They say 2 more weeks, stay home, everybody.
Not without a social response. Right now, there's basically zero coordinated social complaint about it.
There's
right? Even the union, so like, Ford and GM are shutting down plants, and even the unions are getting involved with it and not completely fighting it. They're trying to protect worker health, figure out how they can get benefits and stuff. If that drags on too long, eventually they're going to say, that's enough. We can't do this. We all got to eat.
Yep.
We got family support. We got to do this sort of thing.
Some stats.
We're just not there yet. So let's have a little bit of hope that 10 days from now,
this makes a difference.
Well, it does. I mean, it does make some difference. The problem, part of it's going to be, it's hard to quantify, but
it's also hard to know. But so it's one of the things I complained about Kansas City was, I'm like, I believe that this is really important, but I believe we started too soon. So we're spending our 2 weeks before it's really spread here.
But that's just risk management, right? It's like, do I have the nuclear option now, right? And err on that side of things, or do I wait because it's going to be more important to use it later when I can get more compliance?
Can I jump in on this one?
Oh, I didn't even more compliance. So, I more meant like the other cities needed
I understand.
So there was a study that just came out that said if China would have done their draconian quarantine techniques 1 week prior, they would have had, I think it was something like 100,000 or 200,000 less people infected. If they would have done it 3 weeks prior, they would have had they'd only had like 5,000 people infected. And so there is from that, there is some argument to say like earlier you do it, the less it's kind of hard because there'll be less impact. And so then we'll emotionally feel like maybe it was a waste because only a few people got infected.
Too big of a sacrifice.
Yeah. But the irony is that the sacrifice may have caused the low amount of a small outbreak. So we are in this kind of weird emotional state.
In this situation, that gets to be proven right or wrong because we've seen how it played out in other countries in the world, right? So there's no question if we do this and then people go back to work and then our results are significantly better than in other countries. Sure. Proven correct.
Yeah, I mean, and maybe it's a pendulum swing against the Chinese method, which was cover up. Oh, it's too bad, and then we do these really draconian sort of lockdowns. So
I guess I'm still not convinced. The R naught value is 2.5 to 4. I'm still not convinced we're going to stop it. That we don't just still end up getting. So this, I don't trust the China numbers now. So you're basing all of this on the now reports that China's putting out. Show me, which we'll see. Show me America, and if it completely changes everything. But how does an R naught value? R naught value is if I get sick, how many people am I going to get sick? And so that means that if on Monday 4 people are sick and we have a daily R naught value of 4, then tomorrow on Tuesday we have 8 people sick, and then 16, and then 32, and then my math starts getting fuzzy, 64, and then 128. So it's just exponentially grows.
You just have to think of gaming systems. We had 8-bit, 16-bit, 32-bit, and Nintendo 64.
I was just doing RAM. I'm like, all right, how does RAM work? So if that's the case, even if we do all this, why don't we just so according to the CDC, it's not a question of if, it's when. And it's going to spread. And so all they're trying to do is flatten the curve. That's all they say. They don't say we're trying to keep it down to only 80,000 people get sick. They're just saying, hey, we don't want 80,000 people to get sick in the same week. So if that's the case, my question is, how long can this go? And then it really matters per city when they choose those 2 weeks.
Right. Because I agree, because there's a psychological cost to this. And we as humans can only bear so much. And so wait until, especially I think people of America, of the United States of America, we are pretty independent minded. And so we're willing to fight for the cause for a period of time. But when it doesn't seem to be paying off, then we are likely to rebel against it. So I think you're right. We have a limited window of this quarantine.
Yeah. And I think in some cities, this 2 weeks right now is so key.
You think that, but then other cities, that 2 weeks should come sometime in April.
That's literally what I think.
That's what you're saying.
I'm so afraid that Kansas City needs to spend these 2 weeks, 6 weeks from now, and we just spent them today. We could have just implemented more reasonable, smart standards and said, hey, everybody, this is coming.
Right.
6 weeks from now, we are anticipating we have to have a 2-week shutdown. Restaurants, you need to be switching to online orderings and takeout, just like in these other cities. Hey, schools are going to get closed. Start thinking about daycare, all of this stuff. You really
think a local decision was premature?
I think the local decision and probably many places is being overreacted because the press is crushing
That might be part of the reason.
I don't really pay attention to press, and honestly, I don't know if they're actually crushing and going after people. I can't say much about the press. All I can say is what I think locally, because I know locally, and I think it's been very poorly handled.
So if that's true, then the solution, at least from what we can actually do, is continue to be creative in the ways that you can make your business or your work or whatever, make that stuff work during this extraordinary time. And that creativity is really going to be needed if the extraordinary time actually does get extended. And I'd also like to point out, too, the World War II analogy.
It's so bad.
Well, it's not just bad because of the scale and choice and all this other stuff. It's bad because if this does actually get bad, we're going to need that imagery. We really need to not waste it now.
Spending it now.
Because if this is 6 or 9 months of everybody being like, the economy worked one way, now it just doesn't work. Right?
I mean, World War II was 4 years.
Yeah. Right. So, and if we get to that point, Jared and I will do another podcast and we'll tell you all how we can all get through that together. Hopefully it won't come to that. One other thing I wanted to point out, because this is hard money kind of a thing. There's currently a bill that's been proposed just today for $1 trillion in stimulus that the federal government is going to use. I think $200 billion is for bailing out the airline industry because their entire industry is completely
decimated. They jumped it to $200 billion?
Yeah, because
it was
the airline
100 and now it's 200.
That's what the proposal is. Who knows? It might just be a negotiating tactic because they want to get 600 billion through. I don't know. But that's what, I mean, seriously, it's so silly. Everything works the same, whether Jared and I are negotiating over $1,000 or Congress is negotiating over $1 trillion. It's all just numbers. It's all just on the base 10 multiple system. So it's 200 billion for that. 500 billion. What they're arguing about right now is 500 billion to send checks out to, I think all households, certainly less than $1 million in taxable income last year. To be able to send checks out, because we do know that some paychecks are just going to be missed because for 2 weeks, millions of jobs just aren't going to be there, basically.
Just up the paychecks for people who are less $1 million. Okay, keep going. Sorry.
It's not, I don't know that that's the number. Don't get stuck on that number.
Watch it be.
And then the other 300 billion of that trillion goes to emergency forgivable small business loans. So if you're a small business owner, be watching this, because if they do implement a program, probably through the SBA, to be able to give short-term bridge loans while your cash flows have been interrupted by all of this, that apparently might be forgivable. Keep your eyes out for that. I mean, if it does happen, you're going to know about it, but that's definitely what's being debated right now in Congress. And sorry, that's the other reason that I brought this up, is that's $1 trillion. That could help shore up the economy for what is only a 2-week slowdown period, maybe a month. The government does not have the capacity to go spend $4 trillion if this thing goes for 2 or 3 months, or we have to do it twice or 3 times a year. So this will be, if we get to that point of we have to make hard choices, we shouldn't allow ourselves to believe that the government can actually pay for and cover the gap of all of these things. So that's going to be a tendency with any bailout. It's like, why don't we just bail out everything? Well, there's technical reasons, but eventually the government sort of runs out of money.
Well,
they don't run out of actual money. It's just their money becomes worthless.
Trump even said, we're going to go big. We're not doing a bunch of small stuff. I mean, he practically saying like, we're going to do something, maybe 2 things, and then it's going to play out.
Right. Just to help Jared a little bit, numbers I heard is for individuals who make up to $75,000, they'll get it, but then it will diminish, or they won't get it above 70, or
I can handle
or
that.
Families who make 125. So it's kind of like
really
the other.
Hope that's it.
Yeah. So that's what I heard today. Question is, interest rates. What's going on right now, and is there an opportunity?
First off, the Fed cutting rates is not directly correlated with lower mortgage rates. As a matter of fact, the Fed cut rates I think so many people.
It is directly correlated. It's not perfectly correlated.
Yes, they're not like the Fed doesn't cut, you don't drop. But so the Fed drops the rate, right? So mortgage rates came down a little bit. They dropped it again, came down a little bit again. So when I called my bank and they were starting to skyrocket the other direction,
why did you call your bank?
Because heck yeah, I'm doing a cash out refi just in case I need it and or have opportunity.
So you're refinancing your mortgage. That's all. You're refinancing your mortgage.
Refinancing my mortgage with cash out. To answer your question, Sam. So it's an opportunity cost. I'll just pay the interest in the meantime. My local bank allows you to pay that money back.
So what happened when you called them?
They told me, so I was trying to do the paperwork that night and I was like, I'll just do it in the morning. So I call them at like 9 a.m. Like, oh, it just went up an eighth of a percentage point since at 8:30. And I said, what? The Fed just cut the rates big time. And they said, yes, that's true. But in all of my history, I've used this guy multiple times. He's been there for over a decade. He's like, I've never seen more than 24 apps in a week. We had like 42 in the last 3 days. He said all the other banks bumped interest rates up to over 4%. I mean, they jumped 0.5%. I got an 1/8 of a percent jump. And he said, we have more apps than we could ever process. I mean, we're trying to be reasonable.
So there's too much demand.
We only
when
went up
more
an 1/8 of a
demand than
percent
supply,
to be reasonable.
The supply here is their ability to actually put a mortgage out there, even if they have the capital to do it. They actually have to process it. So they're out of supply of man hours.
So they just up the rates.
So yeah, demand, right? Pushes prices up.
Insane though. Like up to over 4% as the Fed cut the rates down.
For interest rates for anybody out there, if you got your mortgage, if you have a mortgage and you got it more than 5 months ago, I'm going to say about that, you should definitely be looking to see if refinancing will save you money.
5 months ago, it might actually be above that now. And the rates are so high right now. It's weird. I was telling everybody to refi, and I'm like, don't refi, don't refi, don't refi.
I still think that's right because
because that's what my loan guy, I looked into it too, and he's like, yeah, the rates are weird right now, so don't. Once
the demand comes down a little bit,
so
they'll be check 2 months.
Check in weekly. Check in weekly because it's such an aberration that it could. Everybody else have a more psychologically consistent point of view, and don't check hourly. Check weekly.
Don't be me. refresh.
But you should. Hey, but you absolutely should. It makes
not
a
even
deal.
at work. Just hit freaking refresh.
That's good. So that's part of the interest rate thing. The other thing, I mean, there are a lot of different implications to interest rates going down. The government can borrow money at less. So if we do have $1 trillion stimulus package, at least we'll be paying very little interest on it. We weren't paying the interest anyways because the Fed was the one that bought the debt, but whatever.
Any other questions that have rolled on in?
I keep hearing this. So this is actually a question from me. I keep hearing this concept called the V-shaped recovery. So some people say, well, have a V-shaped recovery means as soon as the coronavirus kind of blows over, the economy will come roaring back. And then some people say, no, this is going to be way worse. Great Depression, that kind of stuff. So what are your thoughts on that?
My base case is probably something more like a U-shaped recovery because valuations were so stretched in the U.S. already on the stock market. Things were they were expensive going into this. We used this phrase before, but markets were priced for perfection and then things weren't perfect. So because of that, I tend to think that whereas the V is it goes to the bottom and then goes straight back up. The U is it kind of goes to the bottom and it takes a while to get there and it kind of levels out for a while and kind of does this before it starts to grow again. That's probably my base case for the general stock market. Particular assets that you can buy, particular investments could be more V-shaped. So we saw today, something that went down 25% yesterday, went up 48% today. The stock that we've been looking at. There's such a crazy amount of volatility in the market right now. It's just a weird time. So there will be examples of stuff like that. But base case is probably more U-shaped. I'm not convinced that government intervention is going to completely shore up markets. So
small business can be different on different local economies. But if for some reason we can actually go 2 weeks off and people get back to work, honestly, I don't think it'll affect small business as much because mostly around the fact that I think the millennials are going to take the biggest hit. I think the market's going to have time to recover. Even if it's U-shaped, people will be fine with that. They'll just be happy with stability. With the millennials, who I think are going to get rocked the most, they're going to go, well, on average, I was, the average one's, $50,000 in debt. I don't know. College debt. They're just going to go, I added 2 more to it and go back to life. They're used to having debt. They're used to not feeling like they can ever get out.
They can service debt. It's just what,
it's what they do.
Adulthood is, right?
My payment's up $30 more. Maybe I'll do some extra Uber driving. I don't know. Figure it out. They figure it out. So that, I think, could actually help small businesses get back to normal.
I am actually pretty optimistic about that for the long term of the economy. So I think if you do end up towards the end of this, if I'm right and we end up in that U-shaped kind of thing, then there are reasons to be bullish on the future of the American economy, because I do think Jared's right that the millennials actually will be very, very productive. And that productivity is fundamentally what drives an economy. An economy is fundamentally what drives asset returns. There are other things that over shorter periods of time can do that, but fundamentally economic growth produces investment returns.
We have one more question that I think would be good to touch on, since that was sent in beforehand, which is a kind of maybe a unique one for us. But we had a listener from Ghana who asked a question. How can I start investing with 1,000 Ghana dollars, which equals, I looked up, $178. So both being outside the US and $178. How could someone get started investing?
This has to be very generalized because I don't know, what publicly traded securities in Ghana look like. I don't know your ability to be able to access trading in U.S. securities. You can probably open an account with a major brokerage house if you wanted to. Go online, try to do it. They'll ask you questions. So Fidelity, TD Ameritrade, Charles Schwab, E-Trade. You could go to one of those and try to find out if you can invest as a foreign national. If you can, either there or in your local economy, in your local stock market, with that amount of money, what I would do is I would try to find 2 to 4 companies that are traded that I can buy. I would try to find out something about them. A, how their business works. B, do they make money? C, how do they make money? I would take, if I was getting started in investing, because I think that is the premise of your question, the most important thing in getting started in investing is learning how investing works. And investing works by businesses doing something that produces a profit. Go figure out some businesses that you can buy some of their stock, how they produce profit, and then buy a couple. It's likely that you're going to lose money on some of them. It's likely you're going to make money on some of them, but you will learn so much that it will make you a better investor for the future. That's the best advice. There are a lot of other different ways to do it. You can hire somebody to do it. You can use sometimes, once again, I don't know in Ghana whether or not you can use a robo-advisor or not, but there are other options. But if you just want to learn about investing, if you want to start investing, take 1 week's pay, whatever that is for you. Take 1 week's pay and buy one stock, and use 1 other week's pay to buy another stock, and then track both of them and see what happens. And then slowly learn about how that works. As those businesses grow, you'll make money. That's basically how investing works.
Best of luck. So I really appreciate it. Thank you for tuning in for It's Just Money Live. Again, my name is Jared. This is Jack. You had Matt behind the scenes. And we are just thankful that you are here and are enjoying our show. So if you want to keep track, we release a new episode every Monday. And we schedule our It's Just Money Live episodes. If you follow our page, we announce them and schedule them. So thank you very much. Thank you for listening or watching It's Just Money. We hope you enjoyed the episode. If so, please subscribe so you don't miss out.
Also, leave us a 5-star review wherever you listen to podcasts. If you have any suggestions for future episodes, please comment below.
But remember, it's just money.